So the Spanish government has proposed a 100% tax on property purchases by non-EU residents. Yep, it's a big deal. It's a big piece of news. Now, I know you may have heard of this before. You may have heard of this proposal, and that's because some months ago, the Spanish Prime Minister, Pedro Sánchez, did in a speech call out this tax and say that they were going to be implementing it. He called it out as a proposal. But something has changed. What has changed is this is no longer a sort of a vague proposal in a politician's speech. This is actually now a draft bill that the Spanish government has put before Congress. So what that means is, one, this is now more serious. It's a more serious proposition. And two, it also means that we have more details. We know what is in the draft bill. We know who this tax would apply to, how much this tax would be, what it's based on. And so I'm getting emails from people, I'm seeing chatter online of people, who are planning to move to Spain or planning to buy a home in Spain who are really worried about this and want to understand it in more detail. So in this video, I want to cover three different points, three different areas. First, I want to give you the details on what's actually in the draft bill, who this tax would apply to, who it won't apply to, and how much this tax would be, like what this 100% tax is based on, 100% of what. Two, I want to give you some expert perspective from a leading Spanish tax and property lawyer. And three, I want to give you my perspective on this tax and what it might mean if you're planning to move to Spain and planning to buy a home in Spain. If you don't know me, my name is James Blick. I'm the founder of Spain Revealed. I've lived in Spain for 14 years. I've built 2 businesses here. I have a wonderful family, and I help people move to Spain the right way, which I do with a combination of step-by-step guidance, expert advice, and community support. I'm actually not in Spain right now. I'm in New Zealand visiting family. You can tell from the background behind me, but let's get into this video because I really want to help you first understand what is in this proposed bill, who it would apply to, who it wouldn't apply to, and how much you would have to pay if you did get hit with this tax. All right, let's kick off. Okay, so what is the proposal? What are the details of this draft bill? Well, first of all, what is it called? It's called the State Supplementary Tax on the Transfer of Real Estate to Non-EU Residents, a real mouthful. And it's a national tax that would apply to the purchase of resale residential property to individuals who are A, not EU citizens, and B, not Spanish tax residents at the time of the purchase. It does not apply to the purchase of newly built properties, say from developers, if you're buying off the plans, etc., or buying new properties off developers, doesn't apply in that case. Doesn't apply to transactions between companies. And again, to be really clear, it doesn't apply to EU citizens. I'll explain a little bit why. And it doesn't apply to a foreign purchaser of real estate in Spain who is a tax resident at the time of the purchase. So clearly this law is targeting, private non-EU individuals who are looking to buy, say, a holiday home in Spain, a second property in Spain, perhaps an investment property in Spain. That is who this is targeting. And you might ask, okay, well, why? What is all this about? Well, as I've mentioned on this channel before, there is, and as you may have read, there's a housing crisis in Spain. And so this is another of the Spanish government's kind of myriad of proposals to deal with this housing crisis, obviously to reduce, the amount of properties that are going to people that effectively don't live here and aren't living a life here. And you might be wondering, why does it not apply to EU residents? Well, there's a rule within the EU that EU countries have to abide by, which is the free movement of capital. Within the EU, there needs to be a free movement of money, of wealth, of property. A government in the EU can't limit that. So I also want to be clear who this doesn't apply to. You might be thinking, okay, I'm moving to Spain from the US, Australia, and I want to buy a home. So it sounds like, I don't fit those categories. Potentially this may apply to me. Just to be clear. So if you are here and you've been here for a few years, you're a tax resident in Spain, you're living on your non-lucrative visa, you're a digital nomad visa, whatever it is, and you buy a resale residential property, this is not going to apply to you. But what it is going to catch is people who are looking at moving to Spain. Say you're looking at moving to Spain next year and you want to buy a property now in advance of your move. And your plan is to live in that home, but if you're buying it now, you're not yet a tax resident of Spain. Say, again, you're coming from a non-EU country. You're not yet a tax resident in Spain, so it would apply to you. Or, for example, you move to Spain, again, maybe on a non-lucrative visa, digital nomad visa, and you purchase a home in the initial months of your move to Spain, you're not yet a tax resident. You haven't been here enough time to convert into a Spanish tax resident. And so this law, this tax would apply to you. Okay, so that's who it would and wouldn't apply to, but what about the actual amount of this tax? The draft bill proposes or has in it a tax rate that is 100% of the tax base. Now, this tax base is the higher of two possible figures. The first would be the value of the property on Spain's property register, or two, it would be the value of the property as per the purchase price, which is usually higher. That second amount, the purchase price, is usually higher than the property registry valuation. So the tax would be 100% of the higher of those two amounts. Now, there is a deduction for any regional transfer tax that you have to pay when you purchase a resale property in Spain. Each region puts a percentage tax that you have to pay, which is effectively a transfer tax that you have to pay on, when you purchase that property. But obviously, it's a lot smaller than what this national tax is proposing. So in the end, it's quite likely that the final tax would be the full value of the property, which really means it's doubling potentially the purchase price of the property. So it all sounds pretty dramatic, right? Well, I wanted to reach out and get some legal and expert perspective on this, to give you another perspective that goes beyond just what's, in the actual draft bill itself. So I reached out to Federico Gonzalez. He's a leading Spanish tax and property lawyer. He's also a featured expert in my Move to Spain masterclass. And I said, Federico, how should people be thinking about this? First of all, when we spoke, he talked about the fact that, this is just still a draft bill at this stage. This is not law yet. Yeah, it's more than a proposal in a speech, but there's no guarantee that this will actually become law. The Spanish government right now is kind of hanging on by tenterhooks, and there's no guarantee that they have the political clout, the political power right now to get a bill like this through, which would clearly have a lot of opposition from the opposition parties. Now, the second point Federico said is that even if this were to become a law, it is very likely that it would face serious and stiff legal challenges. The first of those could be that the law is declared unconstitutional in Spain. That's because the law could be considered confiscatory, or the tax could be considered confiscatory, which is a legal term that means that it unfairly strips people of their property and wealth. Second, it could face challenges at the EU level. It could violate EU law. Now, that's because that free movement of capital that I mentioned earlier, EU court rulings, Federico told me, have shown or have declared that the free movement of capital rule and principle also applies to non-EU citizens. So in short, it's very possible this draft bill never becomes law, and even if it does become law, as I say, it would face serious legal challenges that may strike it down and remove it from the rule books. Now, just briefly, if you're curious about moving to Spain, then you might like to download my free Move to Spain self-assessment. In 10 short minutes, you can get clarity on how close you could be to a move to Spain, what's missing in your plan, and what next steps to take. It's linked in the description below, so check that out. Okay, so what are my thoughts on this draft bill and this proposed tax? Well, there's four things that I want to cover here. And the first is that it seems to me that from the government's perspective, this draft bill is more likely political than practical. I suspect the government knows the law, if it were to become law, would be unlikely to survive legal scrutiny. So it seems the intention, or at least one key intention here, is to cool the market. I see people saying, well, I'm not going to buy in Spain anymore. So it may mean that prices actually do drop. Now, the second thing I want to say is on the communication side. What really frustrates me is the way that this is being communicated, or the lack of communication from the Spanish government about this draft bill. I get emails and I see people in the community talking about this, really concerned if it's going to apply to them and how it's going to impact their plan of moving to Spain. By not being clear about this, I would say, and not really having a communication plan at the same time as proposing this tax, the government risks kind of lumping all foreign buyers and all foreigners together in this. There are people who want to move to Spain and contribute to the Spanish economy and to communities here, and they're worried if this applies to them. So if the government is going to drop a bombshell like this, it really needs to communicate clearly who this applies to and who this doesn't apply to. And third, there's an interesting economic reality here that some coastal areas of Spain actually survive, some towns survive on foreign seasonal homeowners. If this is going to really impact that market, then the government needs to think about this and have a plan for these municipalities that really rely on that model. And I think the last thing, the fourth thing I want to say, just keep in mind and remember that if you are planning to move to Spain to set up a life here, become a tax resident on the non-lucrative visa or digital nomad visa, then this proposed tax would not apply to you. But as I said earlier, I am concerned for those people who are planning to move here and set up a life here, but are looking to purchase a property in advance of that move or in the early days of that move. Now, again, most people, I find, rightly rent first to really make sure the move to Spain is right for them and the move to a specific community is right for them before they buy, but that's not always the best fit for people. So maybe there, in these cases, could be, in other countries, there's a rebate you can get if you then do become a resident within a certain amount of time. But look, who's going to want to spend another 300,000 euros on a tax just to get it rebated in a year's time? People don't have that kind of cash. So it's going to negatively affect those people who are looking to move to Spain and set up a life here and contribute to the Spanish economy and Spanish communities. So anyway, those are my thoughts. Let us know down below what you think about this. I'd love to have a read in the comments. We'll see you in Spain. As I say, I'm in New Zealand right now, and I look forward to reading your thoughts. Okay, ciao.